everyone. Thanks for coming today. I'm going to talk about home insurance, homeowners insurance. As my colleagues alluded to it, we had quite a change. And I want to start with my personal story when I was looking for home insurance for my new place about a year ago. And to my surprise, it was not that easy. It's a typical place, nothing unusual, typical city in California. I would go with major insurance companies like State Farm. Like when I tried to get a quote for my place, I went to the website, and to my surprise, they said, "We don't service your area, unfortunately." Right? So I checked a few other places, and until I finally found one place that could offer me insurance, right? But it was not easy. And the thing is that I'm not the only one who is struggling right now in California to get a home insurance, especially if you get in a new place and a new home insurance as a new business, right? And but the thing is that we want to look further into the issue and to collect data and to explore what's going on with the industry and what are the reasons, right, for these changes, right? Why people are struggling with home insurance. To do that, we did some research and we collected data. We started with our database, right? We pulled the number of policies throughout the years, and we specifically focused on surplus line, new business, homeowners insurance, right? There are three components here, like ANS, new business policies. And what you can see in this graph, right? On the y-axis there is number of policies, and the x-axis there is year. It's been a pretty stable industry in the past, starting in 2014, lasting until 2023. There was no change. We would always get like around 20,000 new business policies in homeowners per year, right? It started to change 2023 when we started to see a growth of, in 2023 we had 30,000 new business policies, homeowners specifically, right? And that even grew even more in 2024 when we saw almost 150 new business policies, right? And again, I'm not even talking about renewals, just new business. So that was a five-fold increase in last year compared into 2023, almost five-fold increase. What are the reasons, right? We think that the reason is that admitted insurance companies announced their withdrawals from California in 2023, first half of the year. State Farm, Allstate, Travelers, and few other companies, smaller companies, they all said that we're not going to issue new policies, homeowner policies in California, right? And we may not renew existing policies as well. And what options do homeowners in California have? Well, a non-admitted market, right? So they cannot find the policy, insurance policy in the admitted market. Second choice is non-admitted market. And that's why we see this growth. Probably that's the reason we see a dramatic increase in 2024 and also to some extent 2023. But beyond that, we want to look further, right? We want to collect additional data from other sources, right? We do not want to limit it only to our database. So we collected data from E2Value. E2Value is a company that provides property valuations, and also we got data from US Department of Agriculture. We want to compare this new growth, these new properties, how they change compared to 2023, compared to 2004 to 2023, across multiple key property metrics. First one was average assessed value. Assessed value is a value coming from tax record. As you can see here, in 2024, the average assessed value decreased by almost 50% compared to what it was in 2023. Again, speaking only about new business homeowners policies, right? Surplus line. Average replacement cost that it takes to replace a property for a newly built, in case of destruction, for example, again, decreased almost 50%. Average square footage, how big the place is, right? In 2023, it was almost 3,000 square feet. 2024, it started to approach 2,000 feet, decreased by 25% in 2004. The next one, average burn probability. Burn probability is a likelihood of how likely the place is going to burn because of wildfire per year. So in 2023, it was about 0.25% of likelihood that the property is going to burn because of wildfire. 2024, it decreased to 0.18%, again, decrease of 31%. And of course, average insurance premiums also decreased, right? From around 10,000 per year in 2023, in 24 it became about 5,000, right? 53% decrease. So essentially what we're getting in new business for homeowners in 2024, smaller places, square footage smaller, right? Lower value, lower replacement cost, less likely to burn because of wildfire, and of course, accordingly, they get charged lower insurance premium, right? So in 2024, the properties that get insured through surplus line started to look more like a typical admitted market property, right? So we see this shift that people cannot find the property in admitted, that typically would do that in the past, and they just but they can find it in surplus line. So that's why we see probably the change in the profile of the properties. We also want to see where this growth is geographically, right? So we prepared a couple of heat maps, one for 2023 on the left, another one for 24. So what we see here is geographical map of California, and the yellow dots represent a city where surplus line homeowners is active. So the bigger the circle, the more policies are active, surplus policies are active in the city. As you can see here, surplus line is pretty well represented across California, but there are some areas such as Southern California and Bay Area where there are bigger and more circles, meaning more policies, right, in these areas. That changed quite a bit in 2024, so you can see that Bay Area and Southern California grew even more, but also Sacramento area, as you can see, had more circles, right, more policies in this area. I think this doesn't really do the justice about the magnitude of change, right? All it does is just show you how spread out or how represented the California surplus line across the map. So in order to assess magnitudes of change, we prepared another plot. What we did here, we tried to get the biggest markets for surplus line homeowners insurance, and we want to see how that changed in 2024 as compared to 2023. As you can see here, the biggest growth was experienced by Bakersfield, right? Grew almost 3,000% in 2004 in terms of number of policies compared to 2023. Just specifically talking about new business. San Jose also increased a lot, 1,800%. Fresno, Sacramento, right, around 1,500%. San Diego, 800% increase. Riverside, 600%. Redding, I think it was 600%. San Francisco, Oakland, around 400%. And Los Angeles increased by 180% compared to what it was in 2023 as compared to 2024, right? We also want to look at the most recent wildfires, right, in Southern California and see how many properties were insured through surplus line in those areas, Palisades, Eaton, right? So what we found is that in 2024, we had 7,444 policies, homeowners policies, that were insured through surplus line, both renewals and new business, right? So this number doesn't mean that they were affected by the fire, it's just the total number of policies that were in those areas. The typical replacement cost for Palisades property was about 2.7 million, and the total replacement cost, essentially number of policies multiplied by average replacement cost, was $20.1 billion. Eaton had smaller numbers, right? The total number of policies were insured in the Eaton area was 2,269. The typical replacement cost was about 1.1 million, and the total replacement cost for all these properties was 2.5 billion, right? So the total for these two regions was $22.6 billion. To summarize, takeaways, what we found essentially is that surplus line is growing, right, very fast. And what we found is that this growth is not only attributed because of the past policies. We get a new type of properties, right, lower value and lower risk. We also found that the growth is rapid, right? You've seen it in 2004, five-fold increase. And that's probably because of the exits of admitted insurance companies from the California, right? We found that major cities are the leading the growth. These are the growth engines, right? Although surplus line is represented across California, but these 10 major cities, they are leading the growth in terms of new business. We found that a total of 104 brokerages are writing this new business in surplus line. And finally, we also did my colleagues did the statistical forecasting, and we expect that this growth is going to continue throughout 2025. Thank you so much.